Hello, my name's Jessica. I'm here with Beta Virtual Assistants So before we start the video today, I just wanted to pop in for a sec and explain this video is actually pretty dated. It was made last year right after Bitcoin crossed 100,000 for the first time. And you and I know that Bitcoin has been over and under 100,000 many times since then, but the point of this video ended up being a really good exploration of mindset, psychology, different trading strategies you can use, and all the things you should be thinking about as Bitcoin grows past 100,000 and beyond. So I hope you enjoy this video and we'll check in later. So it is time to talk about crypto and investing and all of that fun stuff. And today I've got a helper. We'll see how long she stays. She's been a little bit of a troublemaker. Oh my goodness, this one. She figured out how to get into our cabinet yesterday and pulled out half of the food in the cabinet because she was trying to get to the bread that was in the other cabinet. Total troublemaker. So that's a little bit what's going on around here, but let's talk about the big news yesterday, which was not that the cat learned how to get into the cabinet, but rather Bitcoin finally crossed 100,000. We've been waiting for this number for so long. As long as I've been active in crypto investing, the thought was always it was going to cross 100,000. And at that point in 2021, they did think it was going to happen a lot sooner, like maybe by the end of 2021. And then towards the end of 2021, things kind of fell apart. The market kind of took a dip, and all of a sudden, Bitcoin was at 16,000, and I didn't buy any. And I'm still mad to this day that I didn't buy a full Bitcoin when I had the chance, because Swan Bitcoin sent out an email this week and said, if you're buying Bitcoin, that is Bitcoin, and you hold on to it. That is Bitcoin that governments can't have, that institutions can't have, that large mega corporations can't have, because you have it. And as Bitcoin becomes more and more scarce, as people buy it, as governments and all these other institutions are buying it, it's going to be harder and harder to get, which means it's going to be worth more and more because people are willing to pay more for things that are less available. So I had somebody asking in my chat group. I've got a chat group going, and mentioned, of course, last night that it crossed 100,000. Of course, today it's bouncing around. It has dipped below 100,000 again, but it went up to 102,000. I knew it was going to shoot up past 100,000 as soon as it got through that wall, and it did shoot up to, I think, 103. And then right now, at last I checked a few minutes ago, it was 99,000. But it's been breached. And as I said, Swan is saying you got to buy now. Now, of course, that is coming from a Bitcoin maximalist company, which these companies that really believe in Bitcoin, they're the ones who are buying it up, and they're the ones who are saying you got to buy more. And does it become a self-fulfilling prophecy? I'm not quite sure. The guy from MicroStrategy, Michael Saylor, obviously has been buying Bitcoin. I mean, maybe that's what pushed it over last night, was he was buying up Bitcoin. Because he knows the more that he buys less than 100,000, and then it grows to be worth 150,000 or 200,000 in the next few months, his company's just going to be worth that much more. And then he's been doing this perpetual cycle where he borrows money to buy Bitcoin. He buys Bitcoin. The value of Bitcoin goes up. The value of his company goes up. Now he's eligible to borrow more Bitcoin, or to borrow more money so he can buy more Bitcoin. It's like the mouse who, if you give a mouse a cookie, and you go through this whole story. I used to read that book to my kids all the time, and you go through this whole story, and the mouse, it always comes back to the beginning, and that's really what it's like with Michael Saylor and MicroStrategy and Bitcoin. Anyways, I had this person asking in my group today. She was worried a couple days ago because her relatively small investment, a couple hundred, I think, was down $30. And she was like, oh no, I've lost money. And then today she's like, oh, look, I've made money. And it's like, well, okay. So the thing about when you're doing investing that you have to realize is that you are picking a moment in time to put your funds into something that you believe that is going to be worth more later. And if you're investing, you buy it and you let it go. You let it sit there, you let it do its thing, and then you check on it every once in a while. If you have a different opinion of an investment thesis, for instance. So if you buy into Bitcoin, or say you buy into Ripple, which has had an incredible week this week. It was at 59 cents probably 3 weeks ago. Maybe just before Thanksgiving, it was around 59 cents. And it has been all the way up to 240. And even past that, I think it went past 240. Which, if you think about that, oh my goodness, there's a story I tell all the time about this person who invested in Ripple and lost $340,000. If that person is still holding onto their Ripple, they now are no longer losing if they didn't sell. So the thing is, when you're investing, you don't have gains or losses. Those are just paper gains and losses. It could be worth more today. It could be worth tomorrow. It doesn't matter as long as you're holding onto it. You don't really care because you're holding onto it for a day sometime in the future. And you're not going to sell until your investment thesis changes. So for instance, with Ripple, when that person bought the Ripple coins so long ago, and then the SEC started persecuting Ripple and dragging them into court and all this sort of thing, and the price of Ripple took a nosedive because it's like, if we can't cooperate with the U.S. government, what is the point? So at that point, you could look at that situation and go, gosh, I don't know if Ripple can recover from this. And so that might be a time when you want to sell out of an investment because the story has completely changed. If the head of Ripple was an axe murderer and went on a killing spree and you don't want to support that company anymore, that would be a reason to change your investment thesis and to sell out of it. But otherwise, you're waiting until some future date when your goals are met. So it could be that you're waiting for Ripple to hit $3 a token and then you'll sell. Or maybe it's that you're just going to hold on and see what happens. Like in 20 years from now, if Ripple is still around, it could be worth hundreds of dollars a token, who knows, and you'll be very happy. But this person's looking at their coins value going up and down with the cost of Bitcoin, and of course with a couple $100 you don't notice as much. If you have one Bitcoin, which is now worth $99,000, but let's, for sake of math, $100,000, right? So it goes up to 102. Now you have $2,000 more if you sell it, and then it drops to 99. Oh no, now you've lost $1,000, but you haven't sold it. And I told this person, it's like when you buy a house. You don't buy a house because you're worried about the price fluctuation. And the entire time you're living in your house's value is changing with the market. So some days it goes up, some days it goes down, some days it goes up a lot, and some days it goes down a lot. And it doesn't really matter because you're living in your house. The only time it matters is when you get ready to move out of the house, and then you care. And then you're like, oh, look, it went up in value. And usually over time it does. Or maybe you say, oh, shoot, it went down in value, and that's frustrating. But to be looking at something that you've invested in and be worried about it went up or down $30 in a day, that's not a really healthy way to live. That's kind of a way to add stress to your life. The other thing to think about is if you're trading Bitcoin, totally different story. So if you are treating your investment into Bitcoin as a trading position, so you might take a look at Bitcoin right now and you say, look at that. It was at 80 a week and a half or 2 weeks ago, and then it went up to 95, and then it crashed down to 90, and then it went up to 98, and then it crashed down to 92. It's doing like this wiggling thing. And if you see that, and even today it went up to 102, 103 last night, and now it's down to 99. If you are a person who can predict where the market is going, which is what a lot of I've spent this week taking a lot of courses, 2 different courses, to learn more about charting. When you look at the patterns in the market, so a market is a place where 2 people meet to sell something. You have 2 people come together, and one person wants to buy something and one person wants to sell something. And that thing that they're exchanging is worth whatever they decide. So one person could be like, I want $100 for it. And the other person's like, I'm not going to give you $100. I'm going to give you $50. And they have to meet in the middle. Actually, this reminds me that a couple days ago, there was a thing that happened in Korea where the head of the country declared martial law. And he basically ordered everybody to stay home and stay off the streets. And he told the parliament they had to do something. And the rumor is that I read something to do with his political opponents, or he's unhappy with something going on. He declares martial law. Suddenly, there's an exchange in Korea where somebody panicked and somebody said, hold on, they just declared martial law. Bitcoin is worth almost $100,000. If I sell it right now, I will have that cash and I can use it for whatever emergency I think is coming. So they sold, but they must have placed a market order or something, because it ended up the price of Bitcoin in that one exchange dropped to 66,000. It didn't drop there that way anywhere else in the world, but because that one exchange where the marketplace is, where the person said, I want to sell this Bitcoin, and the other person said, I see you and I understand that you really want to sell that Bitcoin, and I'm not willing to buy it unless I'm only paying this much. So they offered 66,000. That person took it. You never know. Sometimes that happens with bots trading or something. But in any case, man, that person lost a lot of money. And that person who bought the Bitcoin for 66,000, oh my gosh. Then the price returns to 99,000, of course, because 6 hours later, the martial law was overturned, and I guess the parliament or whatever was like, heck no, we're not doing that. So really interesting things happening in the world. But because the market came together and said, this person wants to sell, this person wants to buy, and they meet in the middle, the price of Bitcoin, even though all around the world it was worth $100,000 basically, in that market on that day at that moment, it was worth 66, because that's what the people decided to exchange it for. So you always have to keep that in mind when you're investing. The price of your stuff might go up and down, which is why I'm such a huge fan of dividend investing. I love telling the story about buying stocks that pay dividends, especially the stocks that have been increasing their dividends every year. And when you buy a stock that is increasing its dividend every year and you hold on, you get paid money every year to hold on to that dividend stock. And with any luck, the value of the stock is going to go up over time and the dividend is going to increase. And so by the time you get to be me, when I started in getting really serious about investing, it was around 2010. And I think I inherited some money in 2009, and it was probably in 2009. So I bought a whole bunch of things in 2009 because I just inherited this money. And one of the things I bought was 100 shares of Lowe's stock. So Lowe's is a company here in the United States. It's like home improvement, like Home Depot, and they pay a dividend, and they pay a dividend every year, and they have increased that dividend every year. And now 15 years later, I guess, that dividend that I'm receiving from those 100 shares of Lowe's that I haven't touched, they have just sat there, and the price has gone up, the price has gone down. The shares alone are worth 10 times what I paid. So I paid something like $3,000, and now they're worth like $30,000. I haven't checked recently, but you know, something like that. They're probably worth even more now because the market's been doing pretty well over the last month. But at the same time, those shares are paying me a dividend that is now at least 23% of my original purchase price. So if you set up your portfolio correctly, you can have passive income for the rest of your life with these stocks that are going up and down in value, and you don't care because you're getting paid to wait, to hold on to that company. And if you believe that your investment thesis hasn't changed, so Lowe's is still a good company, they're still producing sales and profits and all this sort of thing, and they're still increasing their dividend every year, my investment thesis hasn't changed. I just sit here and I collect my paycheck every 4 times a year and say thank you very much. I really appreciate that. In any case, I think I've gotten squirreled like 3 times. So if you think about, if you want to invest for the long term, you want to find situations like that where you can get paid to hold on to something. And yes, the market fluctuates. Yes, Bitcoin, oh my goodness. If you can find a way to earn interest that is safe on Bitcoin, that's the ideal way to do it, because while you're holding on to Bitcoin and it is jumping up to 106 and then it's jumping down to 95 or whatever it's doing, and you're collecting a little bit of extra Bitcoin every month, that is the best way to do it. But if you want to not invest, if you want to trade, that's a totally different story. So if you're trading, you're seeing those jags in the price and you go, if I buy down here and I sell when it goes up here, and then I buy again and then I sell again, at the end of the day, if I'm trading, however much money, I can increase the money that I'm trading with, because every time I buy here and sell and I lock in that little bit of profit. So I do have a bot set up like this on Bitcoin, and it's set, it's called it's called a dollar cost averaging bot. And it's through Bitsgap. And if you want a discount on Bitsgap, I can get you an affiliate link. But the point being that every time you set this bot up, you say, okay, I want it to buy a little bit here, and then if the price drops, it's going to buy here, 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 here. And I set it to buy about 5 or 7 times. Then I set it to sell when it gets here. So over the last few days, or 2 weeks or something, I've made $200 on this bot because Bitcoin goes up in price and then sells, and then it drops down, and I get to buy more, and then it sells. And the only reason I am not running more money in this account is because I actually want the Bitcoin that I'm buying. So I think long term, with the countries that are buying Bitcoin, with the companies that are looking at buying Bitcoin. I know Microsoft is considering investing in Bitcoin, and if Microsoft buys Bitcoin, then Google and Amazon and Facebook, they're all going to try to buy Bitcoin. And then you've got like craziness because you've got all these companies fighting for the Bitcoin that's out there that people are willing to sell. That means the price goes up. So, like, I don't really want to sell my Bitcoin, but it's kind of nice to make money when it's like doing this thing where it's jagging back and forth. And the nice thing is, I don't have to watch the market and try to figure it out because I've been taking these classes all week, learning about the psychology of trading. You know, when you see things happen in the trading charts, you can kind of tell, like, if there's a big green candle that goes straight up and you go, oh, people are really excited about that, there might be a good chance that if you catch that early, of course, you could ride it all the way up. But anyways, there's these different charting patterns you can look at, and there's probabilities that if you see a particular charting pattern and you trade it the way they've statistically determined to, there's a good chance that you can make money that way. And so I am trying to learn a little bit about that because I do think it's interesting. But it means reading the markets, it means reading charts, it means maybe staring at your computer more than you might want to. So that's why I use a bot, because I don't have time to learn how to do that and trade. So we're going to use the bot to kind of do it on the back end while I'm trying to learn the rest of it. But it is all very interesting. Okay, so this is the other thing you need to think about, especially this time of year. If you're going to take some of these gains, like if you were that person who was sitting on XRP, you rode it all the way down, they call that a round trip. You write, except usually it goes the other way. Usually you buy a coin and you watch it go up and up and up, and you're like, oh my gosh, it's amazing. I'm never going to sell because it's going up in value. And then it starts dropping and you're like, oh, but it'll go back. And then it starts dropping more and you're like, oh, but it'll go back. And then you like ride it all the way down and it loses all of its value. That's called a round trip. But this one, in this particular case, probably did that, but then also did the other end, which is it's now come back, which of course you can't predict. But that person, if they sell, they're going to end up with the same problem they had when they came to see me when I first met them, which is they had these gains in Bitcoin. They had timed Bitcoin sales just right that year, and they made like 160,000, something like that. And $160,000, if you figure out the amount of tax on that, and I don't know the full situation because of course your taxes depend on, are you single or married? Are you head of household? Do you have other income coming in from other sources? Do you have long-term investment income? Do you have short-term investment income? So there's all these factors that go into it that I have no idea. But just based on if that person earned $160,000 and was taxed just on that short-term capital gains because it wasn't held very long, it's a tax bill of $29,000, which is enough to buy a car. And so now in my presentations, I have a picture of a car. And I'm like, would you rather buy a car or pay a tax bill? Okay, let's all agree we would rather buy a car than pay a tax bill. A Toyota Camry, as if I remember right. So the thing is, if you are trading like this and you're riding the ups and downs, now I'm doing it with a little bit of money, so I told you I've made $200. That's not going to be a huge tax bill at the end of the year. But if I were doing it with a really large account and my account were fluctuating that much and I was trading that much to make that much and I have $100,000 worth of gains, now you got to think about taxes because, okay, first of all, if you have $100,000 coming through, now a lot of people, they believe a couple things. So they believe that they don't have to report taxes until they bring it out into their bank account, which is not true. The governments all over the world want you to report taxes every time. They want you to report the transactions every time you trade from one coin to another, especially here in the United States. So they want you to report every single trade. Now, think about it. If you are trading $5 of USDT for $5 of USDC, you don't have a gain or loss because the whole point of the USDT and USDC coins is that they maintain their stable value and they're not changing in value. So if you're buying and selling them, you're not going to have a lot of taxes to pay. You're going to have a lot of transactions to report, possibly, but you're not going to have taxes to pay because if you buy something for 5 and you sell it for 5, you didn't make anything. So if you didn't make anything, you don't have to pay taxes. But when you buy XRP at 59 cents and then you sell it at 240 and say you got a significant amount, now you have to report that. And even more so because maybe the government won't come after you if you didn't report, you made $200 in something, because it's like they have limited resources and they don't have time to chase down absolutely everybody yet. And we're not living in a robo surveillance society yet. So you probably could get away with it, not reporting it, and all that. But if you pull out $100,000 from somewhere into your Coinbase account, and Coinbase is supposed to report that sort of thing or whatever, and you liquidate your $100,000, and then Coinbase sends the IRS at the end of the year a tax report that says you had $100,000, and then you don't report that on your taxes, then they say, here's somebody who made $100,000. That is worth pursuing, that because the government's out of money. They need as much money as they can get. So if you are making significant gains in Bitcoin or XRP or any of these coins that have been taking a kind of a run for it lately, you can get yourself in serious trouble if you're not playing the game right. So that is what we help people with. We help people figure out how to report their taxes so that they don't have to get in trouble with the government, that if the government does decide to come after them, they could say, I reported. It's right here. This is what I did. And this is all my losses, which offset my gains. So yeah, I only reported $5,000 of gains, but that's because I had all these losses, So anyways, I think everybody should play the game, or else be really, really confident in the government's going to ignore you and not come after you, which it could be that all of us playing the tax game and actually reporting and paying our taxes are just the losers, or the stupid people who fall for things. I don't know. But I would rather not get in trouble with the government and report my taxes, pay my fair share, but reduce it as much as possible with smart strategies like selling out some of those losers. I mention often with the story with the person who had the XRP that they started at $1.83 each, dropped by the end of the year to 51 cents. If they had sold at that point and realized just enough losses to offset their gains that they had in Bitcoin, they wouldn't have had to pay $29,000 in taxes. They would have been like, well, I made $160,000 of gains. I made $160,000 of losses. These cancel each other out. I report all the transactions on my taxes, but I don't pay anything in taxes. So that's the way to do it, especially if you're sitting on large losses. And even you can do this because crypto is considered personal property. And at the moment, they don't have a wash sale rule. The wash sale rule, if you've heard of it in the United States, it only applies to securities. So if you buy 100 shares of Apple for $100,000 and something happens and you sell it for $50,000, and then you buy it the next day, you buy back 100 shares of Apple, and then you try to claim that loss on your taxes, the IRS says, no, you can't do that. It's not allowed because it's a wash sale, because within 30 days on either side of the sale, you made a similar purchase. And so you're supposed to apply that loss to your purchase. It becomes part of your cost basis. Anyways, complicated. But point being, you can't really deduct the loss. But in crypto, it's personal property. And if the wash sale rule only applies to securities, then it doesn't apply to personal property. That means that what you can do, if you believe that Ripple is going to come back, which it did finally, but you still, as of the end of the year, you make sure that Ripple is sold, you realize that loss, you offset your taxes, and then you buy it back. And then you're going to pay more taxes later because you're starting at a lower cost basis. But in the meantime, you have completely avoided doing taxes, paying taxes legally and responsibly and all this sort of thing. So yeah, as part of our premium package, we promise to update the accounts whenever they want, pretty much. We suggest like maybe monthly, maybe quarterly, because you go too long without updating your stuff and you don't remember what you did. Yeah, it's nice to have it all nice and neat and go to the person and say, okay, here's where you're at, and this is the report where you can look to see if you have any losses that you could harvest, and this is what you can kind of expect as of this moment to pay in taxes next year, or to have to report for capital gains next year. And so all of that stuff is going on. We're actually going to do a strategy call next week for all of our current members who want to come, talking about what kinds of things to look at for the end of the year and all that sort of thing. So that'll be fun. In the meantime, in 2 weeks, I did put a link in the comments, because in 2 weeks we are going to run the blockchain challenge again. This is how to become friends with your blockchain wallet, because it's one thing to learn how to buy crypto, which is hard enough. But once you have started crypto, the next step is, like, first you get your money in and you figure out how to buy your first crypto. And then you really want to take control of it, so you control it. It's called self-custody, because you don't want somebody else coming along and locking down your account. And this happens more often than you might think. Like if you think about the Canadian truckers who were protesting the COVID vaccine mandates, and the government came along and froze their bank accounts. And what are you supposed to do when your government comes along and says you can't access your money? Which is half of the reason, or I don't know what percentage of the reason, but this is a really important reason to have access to crypto, because it gives you control over your stuff, but only if you have it out of the centralized exchanges. So if you open an account with Coinbase and you have all your stuff in there, that's great. But then if Coinbase, like one day you decide to sign into your Coinbase account with a VPN and Coinbase doesn't like that, and they say, nope, sorry, we don't know that you're you, so we're locking your account down. And then you have to argue with them to get your money back out. So rather than have that happen, unless you're actively trading with your cryptos in a centralized exchange, that's one thing. Because like, for instance, the bot software that I'm using, it works with an exchange. So I do have to have some funds in there for that. But the rest of my funds I've transferred to my own wallet. And the thing with having your own wallet is, like, how do you use it? So that is what we are teaching in 2 weeks. If you would like to learn how to take control of your own funds so they are in your own wallet and you have control of them, we're going to talk about different options that you can use for those wallets. We're going to talk about how to read what happens in your wallet on the blockchain and all that kind of thing. We'll spend 5 days talking about that. If you'd like to sign up, the link is in the comments. It's really exciting times. If you haven't bought any Bitcoin, look into Swan Bitcoin. I know I've put referral links on the last few videos we have, so if there isn't one on this video, go ahead and look at a previous video. If you use our referral link, you get $10 of Bitcoin added to your account. It's the easiest way to do Bitcoin for people in the United States. I don't think they do international customers, but for people in the United States, you can connect your bank account, it takes it out, you can send funds back and forth, and you can have a daily purchase order. So I still, all this time later, it's been more than 3 years now that I am buying Bitcoin every single day. And I was buying $10. I've upped it to 15. It's not very much. It doesn't add up very quickly. But no matter what happens, if Bitcoin's at 100,000 or when it was at 16,000, I was buying Bitcoin. So I did buy some Bitcoin at the $16,000 price. I just should have bought a whole Bitcoin while I had that opportunity, because at that point, I only would have had to pay $16,000 to get the whole Bitcoin, and now I have to pay $100,000, and that's a whole different story. So if you haven't bought any Bitcoin yet, highly recommend it. I think it's got a bright future, and I could be drinking the Kool-Aid of the Bitcoin maximalists, and I could be completely wrong, and Bitcoin could crash tomorrow and never come back. Who knows? So it's not financial advice ever, but the tea leaves that I read say it's going to be really good in the future. And if you want to learn more about your wallet, check out the link. If you have any questions about taxes or end of the year financial planning so that you don't have such a big tax bill next year, email us, book a call. And other than that, have a great week out there. It's exciting times. Go buy some Bitcoin. See you later.
And that brings us to the end of today's video. I hope you found something valuable or interesting in what we discussed, and if you did, be sure to hit that like button and subscribe for more content like this. Let me know in the comments what you'd like to see next, and until then, stay curious.